Hey, hi everyone. Welcome to Primary Market Chatter brought to you by Sunday Investing. This is our December 5th week IPOs edition, and this should be a rather quick episode as we are only doing two companies today because there are just two IPOs that we have to cover. One is E2E Rail, and then the second is Modern Diagnostics. We'll talk about both of them, but yeah, before we actually get started, just want to highlight a couple of housekeeping news. One, we're not SEBI registered. Nothing that we say is qualified opinion. आप अपना research करके ही अपना डिसीजन लें. We don't understand your situation, you don't understand our situation. So definitely take everything with a certain bias. We also have our biases known and unknown. So do not do whatever we say. Definitely use this only as what some of us are discussing with respect to our IPO strategy, but आप अपना काम खुद से करें. Second thing, like if you haven't followed the YouTube channel, go ahead and follow the YouTube channel at the top. It's Sunday Investing. That's where we post all our companies as well. Now, before we actually get started, I know the year is towards the end. Rohit, you were discussing something interesting with respect to how the year has been for you, right? For quite a few people, like how do you think this year has uh, been in terms of like the returns, etc.
To be honest, IPO investing has been fine. I think, different people keep money for different things, right? Like your equity obviously has not done anything for a year. Trading has also been extremely hard. But conversely, I think because of the weak markets, there were many IPOs that kept getting undersubscribed in SME, in main board, where allotment was easy and you could actually make a decent return. So my IPO capital, whatever I set aside for that, has actually done extremely well. But of course, portfolio as a whole, it's been a lot harder. I think this has been a good year for the typical IPO investor who takes allotment, keeps it for that initial move. I think without very much difficulty, at least I've been able to generate close to 40% or so on my IPO capital, which is very good in a year like this. But pure equity has been much, much harder.
Got it. But isn't it counterintuitive? Like we would think that for a buoyant primary market, secondary markets need to do well, right?
I think it's just that the subscriptions have been low. So, like we saw, right, this last one, what is this that just closed now? Shamdhani, masala company, coming at 15-16 p. There's 100% GMP, and the world has applied for it. So I think, and therefore you're not going to get it, and it probably will list at 90, like luxury time. GMP high listed 90%, and then free fall after that. So that it's impossible to get those IPOs. So, but you conversely have stuff like even say Finbud or say Physics Wala when it came in main board, or say Safe Enterprises sometime back, Smartin that came. I mean, some of these were just so undersubscribed, and they actually listed well. If you had decent allocation and took a bit of a risk, and there are many others. If you see the set of listings outside of the really dabba companies with the dabba LMs, most companies actually listed positively, and many of them have subscribed 1-2x, 3x, like in the last so many. It's either very high subscription or no subscription. The no subscription ones have always, I mean, there have been enough opportunities here versus earlier when GMP used to be there for everything and everything subscribed highly. I think there's been more opportunity this time. Even something like Suba, Path, like so many of these companies were easy allotment or relatively easy allotment and excellent returns. Even Pathsons that's just listed recently, that's another one. So many have done well with easy allotment. I think that is why it is a bit disproportionate.
Agreed. So risk takers have been rewarded per se.
Risk takers with some, like not blind risk takers, but yeah, at least with some kind of rational, have generally been rewarded. There have not been a lot of bad listings outside of the, like I said, double companies.
Got it. You forgot to miss one company which at least I had gotten in train lodge, which was Sodani Capital. It changed
Somehow
everything for me.
yeah, that was such a bad hit. I applied full force, but somehow that was not my day. I got zero.
But yeah, LG, you got 3 out of 5. So got covered, right? But it's been a reminiscence of how 2025 has been. But yeah, with that, let's move forward and start the episode. We'll be covering two companies, like I said. rather small issue, only two SMEs because main board पे कुछ है नहीं. I think this will continue at least for the first 1 or 2 weeks of 2026 as well, and then there should be a plethora of IPOs which should be hitting. But yeah, what we'll be doing is we'll be covering them, and again want to highlight that if you miss any of them, we'll put them on YouTube, and do not take anything what we are saying on face value. Definitely do your due diligence. Especially important because while everyone's risk profile is very different, right? We can only talk about ours. So only use this as a way to know about the companies and then take a decision basis what you anyways do. So setting up Modern Diagnostics, the first company I'll be talking, or Sachin would be covering. Incorporated in 1985, company is a diagnostic chain in India offering a comprehensive range of pathology and radiology services. So pathology or radiology की company एक और. Quite a few have came in the past and some have like majorly disappointed versus others who have done okayish like Chandan. It seems it's one of them like other diagnostic players. In terms of the IPO, it's a 37 crore IPO, all of which is a fresh issue. 37 crore का है, market cap 136 crores पे. FY25 फाइनेंशियल्स की बात करूं तो 79 crores का टॉप लाइन और 9 crores का बॉटम लाइन है. सो FY25 में 15 टाइम्स आ रहा है. सो FY26 जो कि अब तो हो ही गया, राइट? यू आर 9 months in FY26. So FY26 should be rather better. Let's understand. In terms of the LM is Beeline Capital. So with that, over to you, Sachin, to talk about Modern Diagnostics.
Am I audible?
Yeah.
All right. So this Modern Diagnostic and Research Center, so they are based out of Delhi, and primarily Delhi and Haryana they are covering, and they have been incorporated since this 2012, and now they slowly have ventured into this IPO and public limited company. But they have a history of going way back from 1970 to 1980s, where the promoter Mr. Devendra Singh Yadav, they started the operations in Gurgaon and then slowly ventured into other areas of Delhi and nearby Haryana and Chandigarh. And now the whole family is within this similar business only. In this Modern Diagnostic only, their daughters Deepali, some Asha Yadav, etc. All are family members. This Mr. Devendra Singh, he is an MD from Army, so that is his competence to handle this business. So what they primarily do is they offer all sorts of pathology and radiology services, blood test, body scan, CTI हो गया, MRI, ultrasound, mammography हो गया, full body checkups, advanced checkup of these body checkups and test of the samples that is needed. They also they provide. They are currently operating around 21 centers across 8 to 9 states, and primarily in North India only, Haryana, Delhi, UP, Punjab belt. Some centers they also have in Jammu and Kashmir, and in some parts of Madhya Pradesh as well. They are just like other players. They are operating on this hub and spoke model. Around 18 to 19 labs they have for this processing of samples, and around 3 to 4 are their heavy capex centers which have these CT and MRI machines. And they have a good number of collection points as well, spread across for the sample collections. All of their centers that they have are on asset-light basis, and they have leased all of these. They haven't yet gone into the franchise mode, but slowly, if they can scale up, they will go into this franchise mode as well. 75 to 80% revenue is coming from the pathology segment, and the rest is from the radiology. This has continued in FY25 and in the current year as well. And their home collection business is around small only for now, 10 to 11% only. For the profile of the customers, B2B is around 55% of the revenues, which includes these hospital tie-ups that they have, some collections from private corporates, etc. And the rest is this B2C segment, walk-in ho gaye and home sample collection, etc. They from the last 2 years only, they have also gone tie-ups with some hospitals in African countries like Nigeria, Uganda, and some neighboring countries as well, like Nepal. So there they supply these samples for some of the tests, and that is also generating some revenue, around 74 to 75 lakhs in the current FY26. They have these NABL and NABH accreditation as well for most of their labs. And they are saying that from the previous years, our revenue per patient is also on an increasing trend. So that is for the steadiness of the business. Now, coming to financials, in FY23, they did around 56 CR of revenues. And this year actually had losses for them on the net level as well as on the EBITDA level, because that normalization post COVID hit, so that hit on the balance sheet, on the profit and loss as well. So that was on the net level. In FY24, they bounced back around 69 CR of revenues with 16% EBITDA, and the PAT gained some, and the PAT was also into recovery mode. In FY25, the revenues were around 79 CR, with further improvement in EBITDA to around 23% and near 11% PAT. In the current year as well, till June, they have done around 20 to 23 CR of revenues with 25% EBITDA and 3 CR PAT. What they're saying that our cash has been volatile because we are spending more from internal accruals on these new machineries for all of these labs only, and that will continue for some time because they have to give advances and all, etc. What they are saying that in future we would like to shift this 80 75 25 split between pathology and radiology to around 40/60, since radiology has this better margins as well. One interesting thing that they said that they are also into some development of paper based TB for tuberculosis drug monitoring system, where they will take samples from patients, pour it on a kind of special paper, and then they will supply these papers to the labs where the samples will be tested. So this actually helps some remote areas where there is no access to all of these pathology and radiology services. This is into still validation and approval stage, so that is something for the future. Some risks that I saw in this business is that it's heavily concentrated around Haryana and Delhi. 50-60% revenue is coming in from there, and there are many other players as well, unorganized, organized. Many players are visible. Also, the reliance on this Mr. Devendra and the full family setup that is visible in the business. So they are yet to mature it out of that family thing to get into a full-fledged public company. So that is one thing to note. And now coming to IPO usage, around 21 CR will be for this capital expenditure to deploy more machines into their existing centers, PET machines, MRI machines, CT machines, etc. And they are planning to open one new center in the current year and around 7 to 8 labs for the sample collection thing. Focus will be primarily in Kanpur, Lucknow, and in some parts of Delhi as well. 8 CR is for working capital, and 1 CR is only for repayment of the borrowings. So borrowings will still be around 29-30 CR post IPO as well. Given the IPO pricing, it's around 15-16 times FY25, and they are projecting around 15-20% growth for this year. So probably around 10 to 11 times FY26. And given that they are also paying rentals on EV EBITDA basis, they are probably 9 to 10 times. Peer Chandan is at 28-29 trailing P and 16-17 times EV EBITDA, and this is they are primarily getting the benefit of hospital that they have within their Chandan group, as well as their recent tie with Genus Eco. One recent IPO also came in Victor Diagnostics, so they are radiology heavy, and they trade near 19-20 times trailing. Also, one other IPO came some time back, Star Imaging, that is primarily B2G heavy, and although their payments and all are in time, and they are receiving those payments as well, and they have also announced some new types as well, and but that trades at extremely low, 6 times trailing, and around 4 to 5 times EV EBITDA only. Lead manager here is Beeline, so that comes with good reputation. Anchor list is yet to arrive, so let's see how it comes. For the final thing, I think that competition is very much intense in this segment. Many players are present already, and this current business looks more like a steady state growth business, where they are targeting to double their revenues in 3 to 3.5 years of time. For the subscription part, I think that there is no any other IPO, so that might actually help the subscription for this modern diagnostics. So that is all.
Got it. Thanks. No, yeah, I agree. Because there are no other IPOs, so this one should get decently subscribed. But what is the growth projection? अभी इस साल का 15-20% है और
Yeah.
next year से
Next year say probably steady state 25-30 because they are targeting to double their revenues by FY28. So उसका CAGR निकालेंगे तो it comes around that.
Got it. तो तब तक तो यार कौन रुकेगा 15-20% ग्रोथ वाली कंपनी में? थोड़ी दिक्कत है, स्पेशली छोटी साइज की पैथोलॉजी में कुछ मोट नहीं है यार. तो
Exactly.
लाइक बट इसको तो कोई एक्वायर नहीं कर लेता बड़ा प्लेयर. लाइक व्हाई अ सेपरेट लिस्टिंग? आई डोंट अंडरस्टैंड.
Because वो acquire होना नहीं चाहते थे.
ओके. एंड लाइक इनका रेवेन्यू कहाँ से आ रहा है? गवर्नमेंट से कि पब्लिक से? लाइक
Government is minimal. B2B is around 60% and the rest 40-45%
ठीक है,
is B2C.
तो सस्ती नहीं है फिर तो. अगर गवर्नमेंट का नहीं है तो भी 10-12 पी पे तो कुछ खोने को तो खास है नहीं. बट ये सेक्टर नहीं चल रहा ना.
Right. And especially in SME फिर वो बात अलग हो जाती है.
या स्मॉल बिजनेस नहीं, सेक्टर ही नहीं चल रहा है यार. वरना तो ये अच्छी कंपनी लग रही थी. बट फिर भी आई थिंक चल जाएगी क्योंकि और कोई आईपीओ ही नहीं है, कुछ और करने को नहीं है. बी लाइन है तो लिस्टिंग तो प्रोटेक्ट होगी.
Let's see how Anchor
एक तो
comes.
बनी है.
Beeline was confident कि Anchor should come in well. So let's see.
Got it. Yeah, so that is with respect to Modern Diagnostics. I would probably be applying because nothing else to do. But yeah, let's see. Not in it for the long term. With that, moving forward and talking about the second company. The second company we'll be talking about is E2E Transportation. Setting up the company, incorporated in 2010, companies are ISO 9001 to 2015 certified company engaged in providing system integration and engineering solutions for the railway sector. तो रेलवे सिग्नलिंग वगैरह में कंपनी काम करती है. Railway sector has picked up as well over the last few days, has been in news, and this is like at the right time where this listing is happening. So we'll try and understand E2E Rail, but before actually giving it to Rohit to explain E2E Rail, let me just set it up. It's a 84 crore IPO, all of which is a fresh issue. 84 crores की कंपनी है. मार्केट कैप 300 crores पे आ रही है कंपनी. FY25 फाइनेंशियल्स की बात करूं तो 254 crores का टॉप लाइन था, 14 crores का बॉटम लाइन था. So it's coming at 20 times FY25, but FY26 में कुछ तो लॉस है H1 में, I think, because कुछ तो EBITDA भी negative है, something like that. But maybe because of one subsidy. Rohit, when you are covering it, maybe you can cover it. And then in terms of the LM is Haim Securities, who enjoys a decent repute. So with that, over to you, Rohit, to talk about E2E Rail. Before you start, if anyone has is not following the Sunday Investing channel, please go ahead and do that as well. This is the channel which we now use for doing all our spaces. So keep yourself followed up with that. With that, over to you, Rohit, to talk about E2E Rail.
Thanks, Mani. So I'll explain what they do, and I'll try to just explain what the criticality or the complexity of what they do, and then I'll run through the numbers and I'll address that negative EBITDA in H1 also. So basically, these guys are like at a very crude level, you can say they are like an EPC company, but that's not the right way to look at it. They're in a lot of these technology companies, you have this concept of a system integrator, where they take hardware, software, and put it all together, even though they themselves don't own any IP. They put it all together, and putting that thing together, depending on how complex what they do is, that's where the value is. So what these guys do is they are a railway signaling system integration company. So 75% of the business comes from signaling. So executing projects for the Indian Railways, metros, I think some industry companies as well, or companies in industries. What they do primarily when it comes to signaling is, like, you can understand this as the system that controls and manages the movement of trains on tracks. So something that, like, this, the most obvious thing you'd have seen is the system that gives the red and green signal on a train, that asks it to start and stop. The system that prevents collisions, which is that Kavach system that a lot of people have spoken about. The system that decides the routes. Now, for all of this, you have signals that are on the tracks. You'll have sensors. You'll have places where the tracks will turn. There are interlocking systems, that the system that you would have seen when there is one rail that when there are two rails that overlap, which actually the system that moves the rail that gets a train to go on one track versus another. So all of that is the bit that falls under signaling, including some of the control panels and some of the things that you put in the centralized rooms and so on. This, of course, has a lot more logic. It has a lot more, there is a lot more technical work to determining all of this and how the tracks need to be routed and how the sensors need to be placed, where it needs to be placed, and sort of putting all of this together is a lot more technical than just any other kind of EPC asset-like kind of work. So I just wanted to leave that at the start, just so you guys understood what these guys do. 75% of what they do is this, which in my view is not very straightforward. There is some technology and some tech execution, let me call it, in this business. There's also a very, I would say, core tailwind, which is that whole Kavach thing, where the entire Indian Railway, after that accident that happened a few years ago, the entire thing was the entire railway is supposed to be converted to this Kavach system, which is an automatic train protection system that prevents collisions between trains by auto braking. So that whole thing has been a tailwind. There have been a bunch of companies in the listed space as well, like Kernex and so on, that have had their share price rocket because they are in this specific sector. So this business, I'll come to it, but this business also has a specific subsidiary that is in the Kavach piece. So today what they do is mostly that system integration, which is asset light. Think of it as EPC++. They also have one subsidiary called Nova Controls or something, which has a 50-50 JV with Tata LXC, which is another listed company, a Tata company, to co-develop Kavach hardware and Kavach IP, which will make them an OEM, or which will make them a manufacturer. Now, this is very early on. As far as I know, they have not got, I don't even know if they have any finished products, if they submitted anything to RDSO. So all of that will take time. This, before something like this can be commercialized, it will have to be approved by RDSO. So there is a lag here. Maybe there's an FY27 story. I'm not sure about that. But anyway, that the story is that they have the signaling business, and then they have the subsidiary which is developing Kavach related IP. Now, their numbers or whatever they've done so far in the business has been very strong till FY25. I'll just explain FY26 also. But in FY25, they did almost 250 crore revenue. They've been growing at 35-40% year on year. 250 crores is pretty significant. About 10-11% EBITDA, 6% PAT. They have about a 400 crore order book. And like most railway businesses and government facing businesses, this is obviously going to be slightly working capital heavy, and the balance sheet will not be great. But I think it is par for the course. So they do require working capital, which is why they're coming to the market, and everything they're raising is for working capital. I think it of the 84 crore, if you exclude GCP, everything else 70 crore is just for working capital. Now, for H1, they've done about 100 odd crore and some 6-7 crore negative PAT, which obviously raises eyebrows. What the management has said, so this being a hem company does not really do, or very rare to see them do a public interview, but they have done other roadshow calls and our understanding, and Sachin had attended one of them, and the understanding is that this is par for the course. Again, this is in this particular business, they do a lot of the people heavy, labor heavy kind of work upfront. And a lot of the margin heavy stuff, which is typically the hardware supplies that they integrate and provide, that comes in H2. And the margins will swing significantly in a way that your overall margin for the year, EBITDA margin, will be very similar to last year. So if they did 11% EBITDA last year, for the full year, they will do 10.5, 11% again. So I just wanted to mention this. This is not something that is very evident from the RHP, but this is from one of the roadshows. So for a lot of people, they'll be wondering, where will this company end up with in terms of EBITDA or PAT for the year? At least as per the management, all of the negative in the first year will get offset in the second year, just because that's the nature of this business. It's very skewed. Now, honestly, I haven't seen any listed peer which is this skewed, but these guys obviously are very specialized in what they do. So hopefully, we will see it. If you give it 3-4 more months and they do show the numbers, we will, we'll understand that, okay, this particular segment operates like that, but that's what the management are saying at least. I think one point here is they talk about, okay, actually, let me leave that aside. On the competition front, I couldn't find anyone that is very that's a direct peer. I think today, if you look at it as EPC-ish, you have some large, government EPC players. In the railway space, there isn't any there isn't any private listed player in this space, but you have somebody like a Kernex that does signaling work. They are more of an OEM, more of a manufacturer, more of a Kavach play, but there isn't a direct one-to-one peer for this business. So it's a little hard to just plug this into A or B or C and say give it a specific multiple. Uh, Generally in the space, the most basic players trade at around 25 times on a trailing basis, and more complex players like a Kernex, for example, trades at like 40 times EBITDA. So obviously there is some expectation of significant future growth. So if there is a story that the market knows on the Kavach play, on that Nova controls the 50/50 subsidiary that they have, if there is something there, then of course this company can get a very, very high multiple, because that is a multi-year opportunity. And if they do get RDSO approval, then that is a huge optionality for the business in the future. Right now, though, what they have and what they're coming, I think it is coming at about 20 times FY25. And if I extrapolate for FY26, my understanding is they'll do around 300. So maybe 17, 18 PAT, again, assuming what they're saying holds and they maintain the EBITDA and PAT margins, then it's coming about 16 times this year, which is not that bad for the railway segment. It's actually reasonably cheap for the railway segment. Having said that, given that this is now going to list at 2x, looking at the GMP, you'll have to see, how long you can hold this company, even if you do try and enter at that point, how long you can hold this company, because I think the real value unlocking for this business will be if and when Nova gets its approvals. Kernex rallied a lot when it got its approval, and I think the play here will be something similar as and when the Nova thing happens. So for me, at least, that looks like the real re-rating upside. Otherwise, at 100%, it is absolutely fully valued in my view. Now, phenomenal pre-IPO investors. Now they've raised some VC money, many years ago when they started. But they have also since raised, I think, almost 20% of the companies held by Mukul Agarwal, whose name SME investors just love. So if he comes, there is inevitably, the stock moves. There also Sanchi Fund is also the largest, which is his fund, is also the largest anchor. I think 25%, and the anchor book otherwise also was pretty decent. In my view, I mean, just based on like 100%, if it lists at 100%, I don't see anything left on the table at that point. It would be, it ideally shouldn't do anything, but such is the world. Depends on who comes in on listing at that point. The stock could do anything. But yeah, it's a large issue. My sense is that is the short-term value that will be fully captured on listing, and then it is a function of when the RDSO approval comes. And in my view, that is at least a year away. I don't know if there's been further clarity in any other interviews, but knowing how long this takes and the fact that this subsidiary is just like 8-9 months old, it's unlikely that the RDSO approval will come in at least the next 6 to 9 months, at which point there can be further price move. So that's my sense. I think we have to see where H2 ends, but from what management says, it should lead to enough margin so that the overall year's EBITDA is protected. So at least that hopefully will give clarity. Beyond that, I think at 90%, this is absolutely fully prepped until there is clarity on Nova.
Got it. And without Nova, what is their growth plan like?
If you see their if you see the working capital projections, they're saying, I think, 30-35% kind of growth. Like even if you see the working capital for this year on in the RHP, they suggest that they will do 370, 380 crore types. But I don't think they're going to get that far, because my sense is they've guided for closer to 300 in the interviews. It's also a function of the IPO when the working capital come, how much they can do, because the working capital is coming only in Jan versus maybe earlier they had planned it would come in October, for all you know. So the RHP is not always that reliable. They don't always update that number. But year on year, if I just take FY26 to FY27, they had shown, I think, 35-40% kind of growth. So I would assume that number in any internal calculation. So maybe 420 to 450 in that range for top line for FY27.
Got it. So, and you think that because this segment is hot, right? Like, so
It is
this
hot,
can
but it will
initially get
be,
some frenzy, no?
yeah, it is hot, but it is trading at 30, like on listing, it will be at 32, if it is at 100%, it will be at 31, 32 times FY26. So FY26 also result will come in May. So it will be trailing to FY26 after 6 months or 5 months. So it can get a frenzy, but I don't see it getting too much of a frenzy because it will be like on a trailing basis, it will be at 45x or so. Like if I leave aside H1, if I just see on FY25 basis, it will be at 45x plus on listing. So I don't see how much more upside there is for an SME. Again, magic of Mukul Agarwal we have seen, so anything can still happen. But I feel without the Nova story, like no SME railway companies trading at this. Like all your manufacturing railway plays are all trading at 25 to 30 times. Whether it is that Airflow or Kalyani or E2E, like everyone is in that same range. And this guy is otherwise a system integrator.
So this would be slightly lower in the value chain than Airflow, etc. If not for Kavach, Nova.
I would think so. I would think so. Again, depends, right? This signaling thing is not like normal EPC. It is still more complex EPC. There is a lot of design and engineering that goes into it. So the problem is there is no peer. There is nobody who does exactly this. And so it's hard to say. I'm okay giving this something similar to a manufacturing play in railways, but unlikely it would get more without the Kavach story.
Understood. But yeah, at IPO price, definitely, right? The only IPO which would close, right? So no
Yeah.
competition. So
That goes without saying. I
should
think
be.
with the GMP, everyone will apply and nobody will get.
We'll also apply and hope to get. It's a slightly big IPO.
Yeah, so instead of 1000x, it'll be some 800x, 700x. You're lucky.
Yeah,
Hmm.
yeah, yeah. That is with respect to E2E. That covers the two companies that we essentially had to review today. Very short space. I think this would be ending in record time, probably one of the
So
shortest.
just I wanted to ask, am I
Yeah.
audible? And ये जो PE fund है which had invested in this company, I guess that has been classified as a promoter if I'm not wrong.
ऐसा है क्या? The Venture East,
हाँ मतलब हाँ Ventures is acting as a promoter is what I can remember.
because of their shareholding.
हाँ हाँ
Could
तो
be.
that was slightly strange. I guess मेरे हिसाब से तो first है ये after that Chatterbox Technologies.
तो जब उसके बाद ही इतना कम है 30-35% तो है प्रमोटर के पास उसमें भी तुम बोल रहे
हाँ
हो कि प्रमोटर का
वो
नकली
गिन के असली प्रमोटर पे 10-12% ये कुछ नहीं उतना भी नहीं सिंगल डिजिट है कुछ.
क्या आप बात कर रहे हो
No, promoter.
हाँ the PE funds on I guess 20-22% it is classified as a promoter और उसके बाद भी कुछ KMPs है 2-3. They own like 3-4% each. ऐसा कुछ तो है structure is what I know.
कहाँ है? Zephyr Mantra is the promoter. He is
हाँ
Mukul.
that is a PE fund.
तो C2C की याद आ गई मेरे को उसमें भी ऐसे ही कुछ स्ट्रक्चर था अजीब अजीब होल्डिंग थी शेयर होल्डिंग की नॉट दैट
But
आई एम
I feel
कंपेयरिंग टू
where
कंपनी
I feel markets are not very optimistic towards system integrators in the past. मतलब it is kind of an I value in the Kavach systems, right? I value was in cyber security and all that data वाला thing. This
नहीं
is
वो तो
kind of
आईटी
a
कंपनी था यार आईटी था वो तो
है ना मैं खाली सिस्टम इंटीग्रेटर बोल रहा हूँ बट आई नो इट इज it has got good complexity in the business but if the coverage things doesn't pick up because we know what happened with quadrant एक टाइम के लिए it was a street favorite 110% up from the IPO price अभी IPO price से 50% डाउन है मोटा मोटी just because the RDSO approval didn't came and it had JV with Trailtail which is also a very fine institution government PSU institution and still Tata Elxsi hai. So we never know if that is not coming in this stock would get badly, uh, it would fall badly. Hoping that it gets that Kavach wala thing.
Yes, I agree. I think the system integrator thing, it is absolutely fully valued if it lists at 100%. I mean, that also is high only.
Even 20 times 26 for me for an pure play system integrator is a fully valued thing. 20 times 26 is a very, very rich and fine multiple. उसके ऊपर तो मुश्किल लगता है but in case
That's
the
50%
Kavach things picks
premium.
up
50%
हाँ
premium for Mukul Agarwal, no?
Nana, are see how I look at this company is ki let's say a system integrator in India typically trades at like 12 to 14 times on a year forward. TTM बोल लो. And a railway company trades at somewhat around 25 times 1 year forward in the SME or and the small cap segment. तो उसका मैं mix कर रहा हूँ. तो मोटा मोटी 18-20 टाइम ऑन टीटीएम और ईयर फॉरवर्ड कम्स इन. तो आई फील उसके ऊपर भी एक प्रीमियम मिलना मतलब मुश्किल होगा. बिकॉज देयर इज वन मोर थिंग विच वी आर नॉट कंसिडरिंग इज व्हेन यू डेवलप दिस कवच प्रोडक्ट्स आपको उसमें खर्चा करना पड़ता है. केपेक्स कॉस्ट होता है विच डज नॉट गिव यू एनी काइंड ऑफ रेवेन्यूज टिल लाइक मे बी 12 to 18 months. और वो अपफ्रंट आपको बुक्स पे एक्सपेंसेस लेने पड़ते हैं विच इज जनरली टिपिकली 20 to 40 crores फॉर एनी कंपनी, बीट एचबीएल, बीट करनेक्स, बीट क्वाड्रेंट फॉर दैट मैटर, बीट योर केईसी इंटरनेशनल. तो वो तो कभी ना कभी 20, चलो एसएमई वी नो दीज गाइज डोंट शो दैट मच कॉस्ट, 10-15 कुछ तो लेगा. दैट इज गोइंग टू किल द प्रॉफिट्स मे बी इन FY27. So I don't know how market is going to view it. Matlab, I'm not negative on this company. I'm also bullish, but there are few things which we need to look at it, look upon it very carefully.
Yeah, I agree. I don't disagree with any of this.
Because upfront cost ऐसी चीज है जो आपको करनी ही पड़ेगी. If you don't do it, it would look like a कि just need to show the profits. You haven't taken those costs on the books. These are capital investments, sheer capital investments with zero IRR for at least for 12 to 18 months, and that hasn't even started coming on the books. So I feel Kavach is a pure play H2 FY27 story, not even the H127 story. Until unless there is something I don't know or we don't know.
I don't think they mentioned anything, and they gave any timeline also, because some of these approvals are hard to predict. So it is definitely time consuming. I think this is a stock that if people buy, I don't think this will be held by typical SME investors. If anyone will buy, this will be more of a cornering kind of story only. If there is something. Anyway, this is difficult for us, for normal retailers, to play without being very, very clued into the day-to-day operations of this business. I'd say
Correct.
week on week operations of this.
But Rohit bhai, my point was कि यार, ये जो आप RDS approval के लिए जाते हो ना, generally, typically 60% of the upfront cost आप approval से पहले ही करते हो. So even you cannot predict this kind of approvals or the timelines. आपको खर्चे तो करने ही है, even though you get or not,
Correct, correct,
do
correct.
not get.
Yeah, I've
We have
seen
seen
the
this in 3 companies, correct? Carnex and
Carnex was
and
super
I'll
negative for years.
I'll mention one thing here. Carnex has its own problems which are not out on the street yet, but I know some of the data. So I feel Carnex is never a comparison for any cause of the P multiples. And when you look at Quadrant, it is still a different player. Compare this with any of these players, it's a typical one of a kind company. I feel not a comparable company because उनके जो problems है, market is going to understand it very soon. They don't have funds to execute their orders. This is also, very loud and clear.
Yeah. Let's see what it does. I'm anyway not. I won't buy this at 100%, and I don't have enough. You know, the problem with him is they don't even do public calls. At least it's very rare to see public calls. So you, at least as normal retailers, you cannot get one-to-one with the management. So then you're completely in the dark.
What I've seen, they do calls, but it's just that those are not recorded and put on YouTube. Like you
Yeah,
have to
they're
join
all
that Zoom.
yes,
Yeah.
they're all one-to-one. They're all links that are shared on WhatsApp groups at best. Definitely nothing out in the open, and it's very sort of close, tight knit.
Yeah, agreed. That's how they operate. But yeah, we'll be applying to this company. With that, we are almost towards the ending of this space. Just want to again highlight, like both of these IPOs are closing on different dates. We anticipate quite a bit of subscription. There's one question with respect to expected subscription, but it's anybody's guess, and which would be a better category. I feel everything would be fully valued. Like retail would probably be like like quite a heavily subscribed, and then SHNI also and BHNI. Like I don't see anyone which would have clear cut better probabilities than the other three because just one IPO which is there, right? But I'm assuming that is what you guys also think, right?
1000x.
That's not possible. It's a 81st year IPO. But yeah, we'll see. I
So what
think,
I feel is modern should go somewhat around 200 times, and this guy should go somewhat around 400 times. Is what I feel. 300-400 on this.
yeah, that seems more reasonable. But yeah, let's see. With that, we are towards the end of this page. Just want to highlight if you missed something in between. Go ahead and follow this channel, Sunday Investing Twitter account. We do all our spaces through this account, and I'll be posting the YouTube video tonight itself on the channel on this Twitter account. So go ahead and follow it, and then you can listen to the videos at your own leisure. Thank you so much, everyone, for joining. We'll come back next week with the IPOs. There's nothing which is announced yet, but yeah, we'll see. We are hoping that at least one would come, Bharat Coking, which is the subsidiary of Coal India. But yeah, let's see what IPOs are in for next week. Basis that we'll come back. Yeah, thank you so much, everyone, for joining. Bye.
Thank you, everyone.